Why are super investors buying PepsiCo recently? And should we follow in their footsteps? Well, maybe they are buying because it is a dividend king, which means that PepsiCo is growing its dividend every year for over 50 years. Or maybe they are buying because the stock is down 14% from its peak in May 2023. Or is it the fact that PepsiCo has a new chief financial officer and the company may get some new energy? Well, let's try to analyze and value this company to find out and decide, does it make sense to clone super investors in this particular case? First, let's take a look at the recent results. Revenue is up by 6.7%, net income is up by 14.4%, cash is up by an incredible 102% in the last 9 months, and the debt is up, but only by 0.5%. So such results are very impressive. They don't look like a slow-growing, boring company. But as we know, short-term results may be very misleading. If you were to invest $1,000 into PepsiCo 10 years ago, you could buy around 12 shares. And today, they would be worth something close to $2,025. But let's not forget about the dividends from a dividend king. Through the 10 years, you would receive $439 as dividends. So if we add the current value of shares and the dividends, we get $2,464. So that is a gain of 146% in 10 years. That is really impressive. Let's not forget that we are talking about a huge established company here. Well, let's see what else we can discover. Individual insiders, that is an X, 0.1% of the company is owned by individual insiders, and we would like to see this number over 2%, so unfortunately the management does not have its skin in the game. And are individual insiders buying? That is an X. We see only sale transactions in the recent months. And the super investors own this company. That is, of course, a check. 11 super investors own this stock, including people like Terry Smith, Thomas Geithner, or Thomas Russo. And are super investors buying right now? That is also a check. In the last quarter, they bought almost 150,000 shares and sold just over 97,000 shares. And it is surprising because last time we observed super investors buying more than selling was in Q1 2021. At that time, we saw a price drop of 13%. So it is very similar to the recent price drop. Maybe history is repeating itself. Return on invested capital. That is a check at 13.4% 10-year median returns. And we want to see this number higher than 10%, so that is a nice return. And free cash flow growth? That is an X. We don't see any growth of free cash flow in the last 10 years. That is a red flag. We probably should not expect a massive growth, but at least some growth would be nice. And what do we know about net profit margin? It is also an X at 9%, and the industry average is 14.6%. PepsiCo has one of the lowest margins in the industry. Coca-Cola has 23.9%, Monster 22.6%, and Dr. Pepper has a net profit margin of 14.2%. So that is another worrying sign. And now let's take a look at share buyback. It is a check with 11.9% of shares bought back in the last 10 years. It is a very steady process. Almost every year they are buying back some shares. So we can expect them to continue this trend. And let's take a look at the debt. It is yet another X. It would take over 5 years to pay the long-term debt with a current free cash flow. And we would like to see this number under 2 years. So the financial health of PepsiCo is, well, far from great. The dividend yield is 3%, so in the last 12 months, shareholders got $5.06 per every share through dividends. And the payout ratio? That is an X at 64.3%. And we want to see it somewhere between 20 and 50%, so it is a bit high. But probably they don't have too many growth opportunities, so they can afford such high dividend. And what do we know about dividend growth? It is a check at 6.6% 5-year growth rate. And of course, PepsiCo is a dividend king, so we can see that this dividend is growing every year, and it is like that for over 50 years. Price to earnings ratio is 28, so this is pretty high. What it means is that for every dollar PepsiCo is earning currently, we have to pay $28. But to properly value it, we will use a discounted cash flow formula, and because future is pretty hard to predict, we will create 3 scenarios of this future growth. So in the low scenario, we will estimate a growth of 4% for the first 5 years and then 3%. In the medium, 6% and then 5%. And in the high scenario, 8% for the first 5 years and then 6% growth. Now, why did I use such estimates? Well, soft drink market is expected to grow by 4.15% per year from 2023 till 2027. So the low scenario predicts that PepsiCo will just follow the market. Medium scenario predicts that it will outperform the market, but not by much. And the high scenario predicts that it will grow twice as fast as the market. And so, with such estimates, the intrinsic value in the low scenario is $51, in the medium scenario $62, and in the high scenario $72. But we are not finished yet, because we have to also add a margin of safety to those prices. I use a 30% one, but you can use any margin that makes you feel comfortable. So with such a margin, we get in the low scenario $36, in the medium $43, and in the high one $50. And the current price is around $168. So it is all in the red, and the difference is really meaningful. So PepsiCo is expensive. Even with the current drop in price, it does not look too appealing. Also, its financial health is not the best. No growth of free cash flow, high debt, and below average margins are something to consider. So why do we see super investors buying? Well, for one thing, they can be just wrong, but they are not stupid, irrational people. They must have their reasons. And it is worth noting that you not only get a nice and growing dividend, but also the fact that it is a dividend king makes the stock attractive to a lot of investors. And that can lead to such great results as we saw in the past. So I think it is more about the dividends and the psychology of the market than actual fundamentals. But please let me know in the comments what is your view on this company and its future. If you enjoyed this video, you may want to check out my analysis of another dividend king, Altria, by clicking over here. Thank you so much for watching, and see you in the next one.